And good afternoon, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Wednesday, July 21st, 2021. Again, the market followed through on current analysis, and I have been able to update the chart even a little bit more with some sub-minute waves. So let's get started. Again, we are in the midst of a minor fifth wave up. And as we can see, as expected, this minor fifth wave is subdividing, as it should, into 5 waves of minute degree. And those are evident here in this numbered fashion. So what we have thus far is minute 1 and minute 2 of the minor 5. Then we get into the third wave, which started off beautifully, and that would have taken us to yesterday's high. And I had left off yesterday saying that I felt that that is going to subdivide, and that was wave 1, and we were starting at that point into a small wave 2 correction. I'd given some support levels, and the market did move down, and again during Globex, hit the mark, and then started to pick up and rally again. So we're able to label them as sub-minute wave 1 of 3, and then sub-minute wave 2 of minute wave 3. So then we launched higher again in a 3 of 3 move. And at first I kept thinking, you know, it's just really not moving at the rate that I think it should. And then all of a sudden, boom, boom, boom. And again, on the hourly chart, that happened from the 1 o'clock hour, then the 2 o'clock hour, and then the 3 o'clock hour, and right up into the close. So it was picked up just as I thought, because within a 3 of 3, you would be looking for acceleration. I'm looking for build and all of the above. And that's exactly what I got. So I continue to think that and again, the 3 of 3 is also subdividing, so which is so typical within the third wave, folks. So these are the things I look for to give me confirmation that we are in fact within that wave pattern that I believe we're in. And so again, I'm getting additional confirmation. So within this 3 of 3, we have little tiny wave 1, little tiny wave 2, and we're in the 3 of 3 of 3. So I would suspect that we're likely going to get some continued upside. Obviously, because wave 3 is not done, and then we still have a 4th wave correction and a 5th wave up to complete the 3rd. And then an additional 4 and 5 to complete the minor 5. So I'm feeling a little bit more confident that, yep, we should be able to get up at least and make new highs. And again, these Fibonacci's that I'm showing right now are where I believe minor wave 5 should end up. And I'm going to keep going because I'm telling you, remember what I said yesterday, this is the level. If the most common relationship between the 5th wave and the 3rd wave on a Fibonacci basis comes to fruition, then this minor wave 5 would equal 0.618% of the distance that wave 3 traveled at 15,705. That's quite the feat. Now that's 900 points from here. Yesterday it was almost 1,200 or 1,000, and well, we managed to clip 100 points off of that today. It's going to be a challenge to see if the market can actually do it, to be quite honest with you. But we at least can see that would be where I think max. But any of these others, except this bottom one, would certainly be enough. And so I'm now honing in on this one. And hopefully as this continues, we will be able to add additional layers once we get wave 3 done and wave 4 done. And then I'll be able to get in there and see where all of this is going to finish up. Right now, we don't have enough chart points to kind of go on it. So I can only really put the biggest one, which is where minor 5 would end. But what I can start to do is first let my chart back down to the other level, and I can put up a Fibonacci extension on that first wave because there are relationships between wave 3 and wave 1. There, right there. Okay, so we can see that this 3 of 3, or wave 3, which started here at 67.5, 68.25, would equal 618 right where it's at. And we've already reached that level. So 14,831. That was the 0.618, but then third wave's never going to come in that low against the first wave. If anything, it equals it. But my estimation is that it should exceed it and at least start getting up into here, which are new highs. So if I'm thinking that I can get wave 3 to top out and finish here, that's going to put all the rest of this in some very good company in terms of reaching up to this level to complete the entire sequence, and again, all the way up to that primary level. So again, we're looking for much higher numbers. How bullish y'all want to be? I mean, we're day traders. I can be as bullish and bearish as I want to be, and the market's still going to do what the market's going to do. So I don't proclaim that I am bullish on the economy, on the markets, on anything. I am bullish for the move to finish. And as it is tracking, it is doing quite well to according. So in essence, if it had dropped, and as I was referencing, and gotten below where this wave 2 is, which is 14,516 or 17, that would have been a much stronger signal that we're not in the minor wave 5, and that this is ending up as a 3-wave sequence. So 3 waves up, which means we had another 5 down to do. That did not happen. That's a very strong positive for 1, the count, and 2, that minor wave 4 really did complete there. And that we are now more than likely heading towards the highs. Now there's always going to be the possibility that a major shock to the market comes in. We've got big earnings towards the end of this week, and then beginning of next week, we've got big earnings coming into play. And that is going to direct everybody into what we do. But being that they really are expecting, and again, this is speculation, but they're expecting some of the companies like Apple and Amazon and Facebook and Google and Microsoft and Intel to start blowing the doors off. Intel may pick up some speed here simply because they say the chip problem is over. So there's now going to be a surplus of chips. Well, that should be good news for Intel. So we'll see. They report. We'll see what they come up with. But in any case, I am anticipating that we are going to get some of the doors blown off here, and that's going to produce this pent-up energy. There's a lot of pent-up energy coming into this report of this earnings season that we've got going on, and that pent-up energy is buying. Nobody wants to miss the rally, and they get all these hints, but they see where we sit. They see we're at all-time highs here, not just in the NASDAQ, but in the S&P, not just in the S&P, but in the Russell. Not that close. But we're still in that upper quarter of where all-time highs are. Do you really want to step in here and buy massively into one of these stocks before earnings? No, but people are willing to buy way up based on history. So again, these are second quarter earnings. There is no guarantee that the third quarter is going to supply the same, but I digress. I believe that we still have some upside to go. So I'm looking that wave 3 of 3 should finish up for, like I said yesterday, 14,855, 14,875, and hopefully it gets all the way up, breaks above 14,900 and gets up towards 32 or 33, or even 14,926. All of that would be fantastic for the pattern, for the structure, for the count. It all works. So again, These are where I'm looking. Let's see what they do when the Asian markets open, the European markets open, everybody gets to digest and move. And we'll be able to find out tomorrow morning. But I am expecting it to go up additional. And then we have a small fourth wave. And again, you're going to be able to run Fibonacci retracements from the bottom, where wave 2 bottom, to the top where wave 3 finishes up. And that'll give you your Fibonacci's coming back off for a fourth wave. And again, once this 3 is done, and we get into 4, we've got one more left. And there's the one where it's like, I want to see new highs. I definitely want to see new highs out of this pattern to give us some additional ammunition that we are indeed finishing up and ready to enter into the next phase. But I'm hoping that it's going to end up being more of a blow off type, and that'll take us up here. If it really blows off, then we've got 15,709. More on that as this move progresses, because where we sit, excuse me, you might be just like me saying, I don't know. And again, that's what I would say. All right, downside, I believe it should be shallow, but we have these levels. Now, if this has now gone up, as far as wave 3 is concerned, I don't really want to see it now back below 14,767. I really don't, because then again, this has to get up a lot higher for wave 4, because wave 4 cannot overlap wave 1. If it ends now, it's just going to make it a little bit more difficult, because then it's a huge failure. But again, stranger things will happen. Again, remember that underlying nudge that I'm looking for is going to be a shock. It's going to be a shock to the market. It's going to shock people back into reality of whatever. So not sure what that's going to be, but the high that we're getting to, that's what it's going to take to tip the boat. So I believe right now downside should be limited. If it starts to break, please trade according to your moving averages. Trade what's in front of you so that you're not just sitting there buying, waiting for it to go up again. And that's where I'm going to leave it for today. We're going to try and keep it on the short side. So that's it for today. We've got our upside levels. We've got our downside breakpoints, and we're going to trade what's in front of us. Next update will be Thursday, the 22nd.